Okay, this video is going to be all about moving averages and how I use them to make my market decisions. I'm just going to basically say that, the reason why I use these moving averages are because institutional money uses it, big money uses it, and if they use it, I want to use it because I think it makes sense. So going right into it, these are the key main moving averages that I use. The 20, 50, 100, and 200. Some people use other numbers such as the 10, maybe the 34, which is a Fibonacci number. But the two most common, in my opinion, are the 50 and the 200. And as far as simple or exponential, they don't really matter. Either or work. You can see here that I have the exponential 50 and 200, but I have the simple 20 and 100. So exponential is just a little more weighted to the most recent price action. So that's really the only difference, and it really doesn't matter. Just find your preference and stick to it. But so first things first, the 20-day moving average, you can see is the dotted line in between these bands, which are called Bollinger Bands. They're used to measure volatility, but that's another video. Anyways, you can see going back to late 2010 that, for example, here price stayed above the 20-day moving average, this entire move up, and then broke down, and it was resistance here. But down below it, where price was still above, the 50-day moving average came into play, and we had a nice move off of that to the upside. Back to the uptrend, you can see the 20-day moving average generally held despite this, small little bloop. So, it eventually broke down and we started consolidating within the 20-day moving average, and right above the 50, it broke down, and then the 100-day moving average became relevant, and we had a nice bounce up back to the highs, and back down low, where basically, relative, the 20-day moving average, 50-day, and 100-day were all within the same general range, probably 2 or 3% away from each other. But we had a nice bounce off of there, and even here we had a nice 3-day bounce, and now we start hitting the 50-day moving average and also the 100-day. The 20-day starting to roll over, similar to what it did here. Here, let me delete all of this and start over. So even at these levels, you had nice tradable bounces to the long side, and then bam, the market breaks those 3 moving averages, which were holding price up, prior to when it broke down, and then the 200-day moving average became relevant, and you can see we had a nice bounce off that back to basically the highs for the year, came down, found support generally at the 3 moving averages, the 20, the 50, and the 100. Again, we had a pretty nice bounce. It was profitable for a trade, and then bam, we have a huge breakdown. So even the biggest moving average, which investors generally look at, the market is below. So now a lot of people are selling into any strength, and let's just go into detail. Here it was just really an oversold bounce because we went back to the lows. No moving average was relevant, under or above, 20 and above. Maybe the 10 was relevant. I don't know. That's too micro for me. But, you can see we had a bounce up to the 50-day moving average, sold into it, bounce up to the 50, sold into it, bounce up to the 20, sold into it, and then we had a big low, a move to the 20, and then we had a down day, like a pause, but we continued to the upside, broke above the 50, and now the 50 was support for the last 3 or 4 days, and now we're moving higher. My assumption is this 1230 level in the S&P, combining with the most recent, the most relevant highs over the past 2 months, we're seeing this 200 and the 100-day moving averages come into play. My guess is we're going to have some kind of pullback, and we're looking to see if this 50-day moving average holds. The 20-day should be up there around the same time. If it does, then maybe we move up to the upside. But you can see that just like they're relevant in some way, I'm assuming they're going to be relevant again. So people, professionals are probably selling into this strength, with the expectations that they'll be able to reload at lower prices, even if the market continues higher. So this is, a generally brief overview of how I use moving averages. They've helped me for as long as I've traded. So I just wanted to pass on what I use.